Thank you, Ben and Neil, for joining us. Thank you, everyone who's attending. We're seeing some of the numbers climb, which is great. My name is Saïd Eastman, and I'm the CEO and GM of Jobs in the US, and we operate a network of hyper-local state sites around the country. We're primarily focused on the Northeast at the moment. Jobs in ME is one of our premier sites, Jobs in NH, Jobs in VT, Jobs in MA, and Jobs in RI. All these states and clients in that area have been asked to participate if they so choose. We're doing something today that we don't normally do, which is we are promoting something and advocating for a webinar that we think helps our community that we work in. We've listened a lot to our clients who are struggling through this pandemic, and so after many months of trying to figure out what we can do to help, given the challenges that businesses are facing with reopening, we decided to dig deep into our network. And so today I'm really pleased to have Ben Stein and Neil Hare join us for this webinar on raising capital in the pandemic. And to be honest, I think we can take the word pandemic out of there because we've pretty much overused it. The reality of it is it's how to raise capital as a small business owner when your community is impacted or when your business is impacted in some fashion. So at this point, I'll just turn the floor over to Neil and Benjamin to introduce themselves, and then the agenda will follow as after their introduction, Neil will speak around real world experiences with the CARES Act, the PPP plan, and some SBA information. And then after that, Ben will spend another 20 minutes on exploring what SMBX has done with its clients and business partners and who they are and why are they in the business that they're in. And then we'll open up the floor to a Q&A for about 15 to 20 minutes using the Q&A function in your chat, which is in the center of your screen. As an attendee, you can submit questions that can be answered live as we move along, and I will be happy to read those questions. So at this point, let's start off with Ben. You want to introduce yourself?
Sure. Good morning, everyone. My name is Ben Stein. I work at SMBX, as I'm sure you've gathered so far. My background is I've been working with small businesses since I can remember. So my parents own a small adventure expedition and language immersion camp for teenagers. So they have certainly seen, the impact on the travel industry in the pandemic in a kind of unique way for small businesses. They've been one of the most affected. But I haven't worked there for a few years. So that was kind of the beginning of my career, working for the family business, leading trips, working with my parents on marketing, things like that. I moved to San Francisco after spending some time with them to work at a company which many of you may know called Square. Spend a lot of time working with small businesses at Square directly, pulling them into the product development process, working directly with them as we built out sales and account management teams, building out processes as Square as a company grew from a little reader to, a full-fledged solution with payroll and the things it does now. And really that was where I kind of cemented my love for this mix of kind of where finance meets technology meets small business. I could, rely and know that the technology I was working on was doing good for small businesses because it was something that I could see my parents benefiting from. And have tried to take that with myself in every job I've kind of gone to since then. So after Square, kind of joined a company called Open Door, which some of you may or may not know. Did a bunch of business development for them, working to help folks buy and sell homes, been in the real estate space. And then after that, came to SMBX, where I lead business development, working with amazing folks like the team behind Jobs in the US and working with Neil, as well as kind of leading sales. So at this point, you know that as I talk to you, as we talk today, I'm somebody who will be working with you through the whole process, right? I'm not just kind of some random person on a webinar. Should you choose to work with SMBX, we'd hopefully develop a close relationship.
Excellent. Neil? You have a lot. You have a lot on your plate. Let us know who you are and what you've been doing with Global Vision and your new firm and SBA. And
Sure. Well, thanks, Saïd, and Jobs in the U.S. for having us on today. I really appreciate it. So I'm President and CEO of Global Vision Communications in Washington, D.C. And Saïd said I'm also of counsel to the law firm here called McCarthy and Wilson. Global Vision is 15 years old today, almost exactly to the day. We have a key focus on small business issues and policy. We represent large and medium-sized brands who are in the small business space. We've done work for MasterCard and Visa and FedEx, and also now I've been working with the SMBX team for the last 4 months, which, as you'll see shortly, is an incredible opportunity for small businesses. I've also been tracking, as Saïd said, the CARES Act and SBA loans. I've been looking at SBA and working with SBA for 20 years. Before I started Global Vision, I was at the United States Chamber of Commerce, where I ran their communications team. So that's, as you probably all know, is the largest business federation and lobbying organization here in Washington. And as you might expect, we work very closely with the SBA and all they do, try to do for small business. So I've been doing that for 20 years. And so I've been obviously tracking the loan program very closely and writing about it. I've had articles in Forbes and other publications, and look forward to giving you a little bit of update on that as we get going here. So thanks again, Saïd.
absolutely, thank you very much. And you know what? This is a great segue into you taking the floor for about 15 minutes to talk about real world experiences. As I know, Neil and I both are on the United States Chamber of Commerce Small Business Council, which, by the way, represents over 380 to 390,000 small businesses around the country and big businesses as well. So that's how I've known Neil. I've known him for about 15 years myself. So I bring to you a couple of people that I have done work with in the past. So this is something that I truly believe in doing. This is not an introduction of a business, but rather an introduction of relationships that I've established over the years. So Neil, take the floor and let us know what some real world experiences and what you've been seeing out there for small businesses.
Sure. Well, so I think the main thing that everybody's talking about and reading about, you see it in the press all the time, is the PPP loans. That stands for Paycheck Protection Program loans. And the headline for you today is that the program still has another week to go. August 8th is now the deadline for the program. The program initially was supposed to end on June 30th, but they extended it, and it had $560 billion of loan money available for small business, and there's still over $100 billion left. There's a whole host of reasons why companies stopped applying for it. But so again, key message for everyone on this webinar is if you haven't applied, I would recommend that you do so in the next week. And you can do it through your local bank, and you can do it through fintech companies like Intuit, and I think Square too actually is accepting applications. Not sure on that one, but you can get it done in the next day. It takes about a day to get the application in there, and you can get some significant capital to help your business. The amount of money that is available per each business is basically you take 1 month of payroll from 2019 and you multiply that by 2.5, and that is the loan amount that you are available to get. The caveat for the money, and this is where there's been a huge debate in Washington and around the country, is that the money is predominantly for you to use on payroll. The federal government, both parties wanted businesses to keep employees on the payroll, whether your business was shut down or not. And so that's the requirement. So basically, if you want this loan to become a grant, a forgivable grant, you have to spend 60% of the loan money on your payroll. And then 40% you can use on expenses, but the expenses are defined. They're not any expense that you may have. It's excuse me, it is utilities, your rent, mortgage payments if you have them, and interest on loans that you might have had prior to the shutdown. So, you know, for a lot of small businesses, this was kind of tying their hands, right? If you were shut down, you had other expenses that you might have wanted to spend it on, but so be it, that is the case. If you had let some employees go, you must try to get them back on your payroll. There now are exceptions if they refuse to come back, or you can't get them back, or your business is still operating at, you know, under 50% of what it was, then they'll take that in consideration. But again, they're only going to forgive, you know, the loan if 60% is on that payroll cost. You don't have to bring back the same employees, by the way, or doing the same jobs. As we all know, a lot of companies have had to pivot, you know, to change in this time. So if you bring someone back and all of a sudden you want to turn your salesperson into the web developer or whatever, you can do that as long as, again, that they're on the payroll. If the loan is ultimately not forgiven, then it becomes a loan over 5 years at 1% interest. So still a low interest loan, but again, something that you would have to pay back over time. The government does not want that. It's in their interest to turn this money into grant money. And as long as you follow those guidelines, then you should be okay. I can go back into that in a little more detail in a second. And it's important to understand also, and there's been a lot of confusion on this, there is a second SBA loan that is available. Traditionally, the SBA has a loan called the Economic Injury Disaster Loan. It's traditionally been used for hurricanes, think Hurricane Sandy or Katrina. They would declare an area disaster loan, and that would allow businesses in the disaster area to apply for a loan that was up to $2 million. It isn't right now. So what happened here with COVID is the government declared the entire country a disaster area. So every business in America can apply for this loan, and this is a loan. It will not be forgiven. It's 3.75% interest over 30 years. For a business. They also allow nonprofits to take loans. That's a 2.75% interest rate over 30 years. What's interesting about this loan is there is a grant component to it as well. It started out being $10,000 per business. You would just get that check deposited into your account. The demand was so high, they turned it into $1,000 per employee, up to 10 employees per business, and which is a pretty good deal. And again, this caused confusion because people would apply for EIDL, then they'd apply for PPP, then all of a sudden there's like a wire in your bank account for $1,000 or $10,000, and people don't understand what happened. So again, I would say that's an opportunity, if you didn't apply for it, that I would seriously look at, that you apply through the SBA directly on their website. You don't do it through a bank like you do with the PPP. The PPP is a bank or a fintech. EIDL is through the SBA directly. And that they didn't publish it or publicize it, but basically those EIDL loans are capped at $150,000. As I said, they used to be $2 million, and now they've capped it. It's been widely reported, although the SBA, to my knowledge, still hasn't kind of made that established regulation. So let me just get in quickly into the forgiveness piece, because this is, again, you know, businesses, one of the reasons they stopped or they extended the program is because businesses stopped applying for them because they were so worried about the forgiveness piece. A lot of businesses didn't want to be stuck with the loan that they had to pay back. So they were very unclear as to what the situation was. And the main point of confusion was this whole notion of that you certify in good faith that you were adversely impacted by the pandemic and that you could not get credit elsewhere through your bank or something like SMBX or other opportunities. And they traditionally have you document that, but in their haste to get this money out the door, they just let you check a box and say, I certify that I I have no credit elsewhere, and I'm economic impacted. So for, arguably every single business in America meets this criteria. Even if you had a line of credit, you had no idea how long you were going to be shut down. Every business has been adversely affected, in my opinion, and it's not going away anytime soon. So I think that has become clear, and I think you'll see that. But as we all might have seen, there was some bad press. Certain companies, certainly larger companies, were getting loans. Shake Shack and the LA Lakers and Harvard, I think, also took money or was going to get money. So that caused a lot of blowback, negative press. And there was also this fear that if you were audited, that you would could have criminal penalties or you'd be accused of fraud. And so there was about $30 billion of loan money given back by companies who were so afraid of the auditing and what might happen. Again, I don't think that's going to be a problem for 99% of the businesses out there. First of all, most of the loans are under 150,000 because that's mostly small businesses. And if your loans are, probably greater than 2 million is when you'll have the greatest chance of being audited. But again, short of outright fraud, and they've already started this, if you completely lie about your business and you take the money and you go to Vegas with it, and you'll get caught and you'll get in trouble. But short of that, everyone's going to be fine. Other things to keep in mind is, tracking the money. Again, make sure it's on payroll, make sure it's on those 4 expenses, utilities and rent and mortgage and interest. If you have a payroll provider, they will provide a report for you, both going in for the loan to see your loan amount and also coming on the backside when you're applying for forgiveness. They've really tried to streamline the process. So your payroll provider will give you a report, you'll send that into your bank, and the bank will review it. And I'll get into that in 1 second. Best practice is to keep your PPP money in a separate bank account if you can, so you can track all those dollars very concisely and it's not kind of mingled with other revenue sources. And then that'll make the forgiveness piece easier. So in terms of the forgiveness and the audit, let me just quickly take you through the process. Again, you'll go to your bank after 8 weeks is the minimum amount of time that you will be tracking your money, but you have up to 24 weeks to spend that money on the payroll and expenses. Once you've expended all that funds, you'll go back to your bank with your report. Your bank will have 60 days to review that. Most bankers I've talked to do not want to take 60 days. They want to take a short amount of possible as they can, and they want to approve that. These banks do not want to hold 1% loans on their balance sheet either. They want to give you forgiveness. Anyway, they'll review it, and then if it's okay with them, they'll send it to the SBA. The SBA will have 90 days to review it, and that they may take that 90-day period, being the government. If they have questions, they can ask your bank or ask you directly to answer some questions. Again, I foresee that only happening with the larger loans over $2 million. I can't promise you that or guarantee it, but that's what I'm hearing here in DC. Again, if you are asked something, that something probably will be about the credit elsewhere test and how liquid you were at the start of this pandemic. It's all about liquidity. If you had several $1 million in the bank in your business, that might be an issue. If you're venture backed, that could be an issue. But short of those few items, I think most people can prove that even if they had some credit elsewhere, they needed the loan. And again, the worst case scenario for you is part of the loan may not be forgiven, and that loan will have to be paid back at over 5 years at 1%. It could be a shorter term if you want. It could be 2 years, up to 5 years. And last best practice there, the regulations state that you have to keep your documentation on this for 6 years, because in theory, the government could come back to you within 6 years and ask for this information. I don't see that happening either, but best practices, keep your documentation. Lastly, let me just go through really quickly here. As you all are probably reading, Congress and the White House are currently negotiating a new package of relief for small businesses. I'm sure they'll come up with a deal in this week, but it may not happen. They're right. They're still pretty far apart. But the good news is it's going to help small businesses and modify the PPP program a little bit to make it easier. The first thing is under $150,000, the forgiveness will be like a check the box. It'll be another certification. I certified, I used all the money correctly, boom, and you're forgiven. They will allow, and again, this is all potential if the bill is passed. If you, even if you got PPP money before, if you can prove that you're under 50% in revenue in 2020 over 2019, you can go back in for a second tranche of PPP money. They've narrowed it to businesses under 300. Again, the government took a lot of flack on this looking like a lot of big businesses were getting the money. They're trying to set aside money for really small businesses under 10, and for minority and women-owned businesses, they're going to set aside about $35 billion for that. It will also expand those costs that can be forgiven, you know, like PPE equipment or other costs other than those four I mentioned, to give businesses more flexibility, which I think is really something businesses wanted from the start. And finally, they have expanded the program to 501c6s like chambers of commerce, which we all support, and that's a good thing. Those chambers were excluded from PPP, and now we'll be able to access that money. So that's a quick overview. I look forward to answering your questions, and let me turn it over to or back to Saïd or to Ben to talk about the SMBX. Thanks, everyone.
Neil, thank you so very much for this great presentation. And I have to say, trying to keep all that information in your head would require a company like Global Vision to help you, because I'm exhausted just hearing about the process.
Me too.
You know, what's interesting is this is, you know, we think of small businesses and we think about the fact that as a small business owner, there's so many things that you're doing. Not only are you worrying about your own family, your business, your employees and their family, and then you have to worry about the guidelines that the government's putting out. And since they're changing minute by minute, which is even worse. And then there's the unknown of, we don't know what's still coming or what is coming. We're still, you know, it's a really crazy time to be a small business owner. At the same time, I think it's a great opportunity for small businesses to rethink, you know, who are their loyal customers, what they do, how they serve their community, and also who they should really count on. Because this idea of we're from the government and we're here to help doesn't always play the way it's supposed to. So with that said, let me turn the floor over to Ben to speak about SMBX and the significance of what they're doing and how they're helping small businesses leverage both their communities, leverage their outreach, and have been very successful in helping companies raise capital that can be used for more than just paychecks, for things that are really, that make a business tick. So Ben, the floor is yours. Thank you very much for joining us again.
Of course, thank you. And I think, you know, the way I'll kick it off is to tie into a lot of what Neil said is this idea of like transition capital, right? That's like, what was PPP really designed for? And I think if you think about that, PPP was designed to be this like 8 or 12-week period, right? To bridge a gap, right? If you think about when PPP really came out, what it, you know, pieces of the way it was structured, it wasn't, you know, I think at that time when the first round came out especially, right, it wasn't like this pandemic's going to the end of the year. It was really, let's give folks time where they can shelter in place, you know, hopefully we get this virus numbers down, and then, you know, we can figure out a way to get folks back to work. And as kind of the extent of shelter in place is kind of extended, right, as we haven't gotten those numbers down as much as maybe we'd like to, I think it changes a bit about how we look at PPP and what that can be used for. You think about the restriction of funds and some of those things. What we tell businesses at SMBX is you should 100% go for PPP and EIDL. We are not a replacement, right, to those methods of funding. If you can get access there to those grants that are forgivable from the government, 100% go for it, right? Like, we are not intended to compete with that. We're not intended to be, you know, at 1% or 3% interest. Those are really great numbers. But at the same time, I think we recognize that because of the restriction placed around how you can use that money, because of the length of time we're looking at it, PPP might not be enough. EIDL might not be enough. We know I've worked with a bunch of businesses who have actually gotten both, right? They've kept their employees on, they've done the right things, those are becoming forgivable. And what they've done is they've taken time as they've kind of been on this money from the government to reassess the validity of their business, right? Reassess how they're going to exist and find, profitability or survivability moving forward. And that's, I think, really where SMBX is coming into this conversation, right? And I realize most folks here don't know what we do quite yet. I promise I will get into that, but I feel like it's important to kind of set the precedent around kind of how we work. SMBX was around kind of before the pandemic, like a lot of different businesses. And we also had to change the way that we work as this money was coming out from the government, as we thought about what type of company we wanted to be and how we could best serve folks. How does SMBX work? We help small businesses issue bonds to members of their community. Pretty simple concept if you know what a bond is, but not many folks kind of have heard of a bond. You might have bonds in your portfolio with like a wealth manager. Maybe you've invested or purchased a bond before. Your grandfather gave you bond money is a use case that I hear a lot. If you remember, here's your $2 bond money from investing in municipal bonds or something like that. What a bond is really, it's a portion of a loan. So the idea came out, before, when somebody like Apple and Google wants to borrow $1 billion, no one entity, no one person can lend that to them, right? So they break up that amount that they want to borrow into smaller segments so that not one person is carrying the weight of that risk. And we took the principle of that and we took it and we applied it to small business. Small business investing today is really seen as and stigmatized as risky, right? When folks think about investing in small businesses, it's, I'm going to put a lot of money into one specific business. And what SMBX is trying to do is trying to change that perception, trying to find a way to make small business investing simple and secure for members of the local community so that we can unlock the private capital they have to lend and borrow, right? And share that with the small business communities that they work in. So I'll take a step back here, right? And let you know like how like banks work, I think is kind of the best place to start. Not everybody knows this, but many folks do. If you think about a bank, right? Banks don't have any money, right? They take the money that we keep in our checking and savings account. They lend that out to small businesses like yourselves, right? We, as somebody who has, not a lot amount of money, especially at this point, but enough in my checking and savings account, right? I have no say who's in control of who lends that. I don't get to choose if it goes to, female entrepreneurs, if it goes to established businesses, if it goes even into my local community where I shop for, right? That's the decision the bank gets to make. Bank lends that out, right? And then businesses like yourselves pay that bank back, right? Principal plus interest. The bank keeps my money, right? It says you're insured, here's your money back, here's 1 cent, and they keep the interest for themselves. What we really wanted to do was empower individuals in their community to take control over how their money is spent and where that's put. So the way it works is a small business will come to SMBX and say, we'd like to raise, for example, $100,000. We will take that $100,000, we'll break it up into $10 increments. So we'll create what we call those bonds. Each bond is $10. So 10 times 10,000 equals $100,000. We'll put the business through a preliminary assessment, which is similar to underwriting that a bank might do, but I would call it a little bit more flexible, a little bit more lightweight. We look at the last 2 years of tax returns. We look at a profit and loss statement, and we look at a balance sheet for 2018, 2019, and then 2020. We look at the cash flows of the business, especially through COVID, and we look at what the cash flows were last year. We assess the business and just make sure that that business is able to support the loan, right? The last thing we want to do is lend somebody $100,000, and then your first payment back on that is out of the money you borrowed. You don't get to deploy that capital to grow your business. After We assess the business's risk. We'll establish an interest rate and a term. So the bonds will look very similar to you as a business owner as a fixed term loan, $100,000 at 7% interest rate over 5 years, let's say, is a good example. Maybe that interest is 4%, maybe it's 6%, right? We can talk a little bit about how that's established if folks have questions around that. And if those numbers work for you, right, $100,000, 7%, 5 years, we ask you to sign a letter of agreement, a letter of intent. This is where the fun for me really starts, because what we like to do is we kick off 2 streams of work. One stream of work is the operations side, to work with the SEC and FINRA to help your business issue bonds. We have to go through some process to register them, to make sure everything is good and settled with FINRA and the SEC. The second stream of work, which is much more interesting, is the marketing work we do. So we've got a great team of two really experienced online and offline marketers who will work directly with the business, directly with you, to help market your bond offering, to help raise money. So if you think about a company like Kickstarter, right? Kickstarter really provides you the landing page, but you have to go do the fundraising yourself. With SMBX, what we really like to do is partner with you in that, because we see a really strong parallel between sales and investors, right? Your existing customers and potential investors. We believe in kind of building out that marketing plan in 3 main ways. The first is, who are your customers, where if we can get them to invest in your business, right? If we can get them to buy a bond, invest $10 or $100, are going to become repeat customers, right? Are going to become better customers, are going to feel involved in that business, impassioned. They're going to retweet, they're going to like, they're going to share, they're going to be engaged, they're going to show up, they're going to refer. They already love your business. They would do a GoFundMe, right? They want to invest. They want to see you succeed and thrive. They want to see you, go through this period. They have money that they could give, but they can lend more, right? I can certainly donate money in a GoFundMe campaign, but I might be able to lend more knowing that money's coming back to me, right? That opens up capital available to you. So we target those folks with marketing. Second set of folks we target are potential customers, right? If we can get a potential customer to invest in your business, right, who isn't a customer yet, right, we believe we can help you convert that customer, and you can convert that customer into a paying customer later. So there's this sense of awareness and just kind of marketing that we can drive through PR, right, through online advertising, where if we're able to take somebody in and make them an investor, right, they become a customer later down the line. And then the third group of folks that we focus on is the SMBX network of capital. So how do we look at folks and target folks who've already invested in other small businesses on, excuse me, on our platform, right? Get them excited about investing in your business, right? And starting to build this community of folks around your business, right, that are also invested, that also want to see you succeed. So often as a small business owner, when I talk to folks, it feels like me versus the world, right? It's me versus the pandemic. It's me versus my competitors. Now it's me, with maybe my small community of folks. And the only action that folks can take to support the small business is to purchase gift cards, right? Or shop or whatever those 2-3 things are. A lot of what we're trying to do is help convert your network of customers who already love you into investors, right? Give them that extra incentive to take that little next step that doesn't always happen 100% of the time, because now they've got skin in the game. And if you think about kind of PPP and the way that's been distributed, I think, Neil, you brought up a really good point, is like, where was that money distributed to, right? There's I think still a lot of questions there. I know we certainly know there were some mistakes made when it comes to Harvard or the Lakers, right? Or some of these really large organizations that this capital wasn't intended to. But I also think about where people's money is, right? And so a lot of this money is going to protect where people have already invested. And too often, small business owners are on that front line, having invested their payroll, their work, everything, is invested in their small business, but they haven't let anybody else into there. And so by opening up and engaging your customers, engaging your community to invest in your business in a very easy way, does a lot, I'll just say. So that's kind of like the marketing side we take. That's the 3 groups we really target for folks. Going back to the process, Once that marketing plan is put in place that we create for the business, we will launch that. We'll raise your money. We've worked with a bunch of businesses so far. Everybody has hit their target fundraising goal or exceeded it. And then we transfer that money into your bank account, and you make one monthly payment every month, just like you would a bank loan, to SMBX. We take that monthly payment and we split it out and spread it to your investors. So based on how many people bought 100 bonds, how many people bought 1,000 bonds, some people may have only bought one, we'll take care of kind of that management of the monthly payment. And that's kind of the second opportunity that's really, really important to highlight, I think, is this opportunity to be engaging your customers every month in a really tangible way, right? I know that every time my girlfriend, for example, has invested in a few of ours, there's a brewery down the street, and every time she invests, right, she gets that monthly payment, she walks down the street, right, and she goes and buys a 6-pack. It's her reminder to go out and support, right, her business. And it's not just the 6-pack, right? There's an ice cream store up the street that we've invested in, but it's this monthly, on the 25th, I'm getting, some money back from the investment I've made in a small business. It's a great reminder and a great way to stay top of mind for folks, especially if you're not in a big city where foot traffic is decreased. How do you get people coming into your store? Well, it's a great opportunity to really engage them, to remind them why, they love your business, and more importantly, to remind them to take those actions they need to take to make sure, you have a community and you can survive moving forward. Whether that's retweeting, whether that's sharing, whether that's referring, maybe that's just coming in once or twice, extra. And that's like the short 20-minute version or so, dare I say, of SMBX. We set you up, we get you qualified, we help market your business and run on the operations side of things for you. We transfer your money to you, and then you kind of make one monthly payment, just as you would, that gets distributed to your investors.
Well, thank you very much for that, Ben. I really appreciate it. It's really interesting to me. I always think of a quote from Warren Buffett, and it's never invest in a business you cannot understand is the quote that always resonates with me. And I always think about the fact that his favorite soda, or pop as they call it in Massachusetts, is Coke. So he has a daily dose of his Coke, of Coca-Cola. His favorite ice cream is Dairy Queen. He's an investor in Coke. He's an investor in DQ, and McDonald's, where he gets his breakfast sandwich every morning. And that idea of what SMBX is trying to promote, which is invest in the businesses that invest in the community that you live in, I think speaks volumes to to what we're trying to do here. And the reason that we're doing this webinar, as it takes, this is our way of investing in the community, because we're a small business ourselves, and we can't write checks to our clients to keep them afloat. But what we can do is educate them as well as educate ourselves on what we can do to help the community. And in our case, we're putting on this webinar to hopefully communicate that there's alternate ways of getting resources. What I also love is the kind of the working together that you both have exhibited from perspective of, yes, SBA is out there and it's a government program. There's things that you can do, and it's recommended. SMBX is recommending that you have all options out there, but include SMBX platform in your mix of capital raising, community outreach, fundraising, customer loyalty. And it could even, for all intents and purposes, it also is a great way to market, because to your point, you get a dividend note on your loan of $10 or $100, and you think, oh, I haven't had my 6-pack, or I haven't had, So it's like those people who wait for the coupon for their favorite restaurant every week when they see it in their flyer, and they open up and oh, it's $5 off. I guess I can go out this week. But it happens. So that said, let's open up the floor for some questions. So at this point, for all the attendees that are on, we highly recommend that you submit your questions either via the Q&A icon in the center of your screen, or feel free to raise your hand. and I'll be happy to unmute you, and you can ask your question. I think at this point, what I'll do is start off with tell me a little bit about some of the success stories that you've had with SMBX, Ben. And I think you've mentioned some breweries. And some of the business cases that you've highlighted have been, I mean, cutlery. Who would think that somebody is knife sharpening as a thing? I mean, I grew up overseas where a guy travels around with a cart, neighborhood to neighborhood, by door, stopping at, knocking on every door. He has a whistle. Everybody knows that when he shows up and they hear that whistle, they can send the kids out with the knives to have them sharpened, and they give him $1, and then they go in, and he just he just goes around. I never thought this was something that you can actually formalize and create a business. I'm like, so anyhow, so tell me, I'm seeing it now in vans. I'm seeing vans out there, sharpening vans and scissors and all of that. And there's nothing more deadly than a dull knife.
That's a very good point. So you nailed it right on the head. We worked with a knife shop. They are not a cart so much as a real retail store, but a lot of their business did come from restaurants, right? Who would come and get their knives sharpened. This is the #1 place in San Francisco to go. If you're a restaurant, you work with Bernal Cutlery. So they had a really interesting network of both businesses, right, that they wanted to target and work with and reinforce that relationship that they have with folks in terms of community, right? And not being in the restaurant space, but still kind of being in the restaurant space, if that makes sense. As well as kind of they wanted to grow their target community, right, of just retail knives, right? Folks coming in off the street and purchasing knives for their home, purchasing knives for friends. They have everything from kitchen knives to pocket knives and a million things in between. So we helped them set up a marketing campaign. It was we found some really interesting things. The first was folks are really excited about this thing, right? They love the idea of being able to invest in their small businesses. You can't buy Cutco stock, or maybe you can, right? But, for them, it was all about, here's a local place that we can invest in, and a community I love, and a place I shop frequently for, that I just want to help. And so they raced with us before the pandemic, but what we found was we did one Instagram post. They have about 30,000 followers on their Instagram. It drove $25,000 of investment in about 6 hours. That was it. A picture, a little bit of comment, and a note from both the founders, and folks jumped in at the opportunity to invest. So that was really great. The story I really like to tell is the one about Degrees Play-Doh, which is a bar in Oakland. And I know I've mentioned, alcohol companies here and knife companies, but we work with a variety of folks from the service industry, all the way through. The bar in Oakland, what we did with them is we sent out a flyer to every house in like a 2-mile radius or a 3-mile radius. It might've been a little bit more than that. It might've been about 5 miles. And we just said 2 things. One, we're local residents here. The owners are local residents. Rich is the owner's name. Hi, welcome to the neighborhood. We'd love to be your local bar. Stop on in for beer week at some point, say hello, just come on in. 2, hey, by the way, we're also raising money because we want to create a backdoor patio, an outdoor patio outside. COVID was hitting at this time. They knew they needed outdoor space. Help us raise capital to be able to create this outside space so that you have a place to escape to, right? Come get a beer, come get a sandwich, make it easy, make it simple. We had a bunch of people come in and invest. Folks were coming in all the time. We put signage up in the store at the time. But the story that I really like to tell is about this woman by the name of Zahira. Zahira had moved into the neighborhood about a year ago and had been at the bar a few times before. She had a kid. And she told us that she had never made an investment in her entire life before. She had all this capital kind of sitting in a checking account. And as we talked through it, she was really not upset, but she understood that her money wasn't doing anything for her. She was like, this money sits in the 0 interest checking account. It's over 5 years. What's it going to do for me? I would love to take a portion of my capital and invest it into my local bar. I'd love to have that ownership. I'd love to see those returns too. Rich at the time also had an SBA loan. And so what we really did there was the way that we talked about it with her and with him was, we're just transferring this existing payment you're going to make, right? We're just refinancing this existing loan you have, adding a little bit of capital on top, and we're reducing your overall cost of interest, right? So your interest rate is coming down for Rich. You're able to now deploy that capital, that cost of capital, that interest rate away from being, I won't say like useless, right? But into a marketing expense, right? Now, when that money goes from the bank into Zahira, and this is a conversation we kind of had with both of them that they were both really excited about as they were chatting through this, right? Now it feels like it's going into the community. And when it goes into the community, Zahira's point was, well, now I can spend it. I can spend it here. I can spend it at other areas on my block, and we can use that capital to really improve our neighborhood together, right? If we can bring this movement. So she spoke a bunch to Rich and ended up, putting in, a decent amount of money, 5 figures or so. And that was really, really exciting, just to see that conversation between 2 members of the community on either side, and how they were already starting to make plans on how do we make sure this capital stays in the community and moves forward. So we've done about, we've worked with a bunch of different types of businesses. As I mentioned, Degrees Plato raised $140,000. Vernal Cutlery was also up there about 150 or so. We have some smaller raises around 35, and a few folks who you'll see coming in later this quarter doing raises up to $1 million and even more than that.
Tell me a little bit about you list some financial institutions as partners in the back. How do those partners play in your world, given the fact that you have the money you're raising is really from the outside of those partners. So what do those partners offer SMBX, and how do they play in this picture?
Yeah, for sure. So we've got a host of folks, on the BD side scattered around, providing networking support and growth capital and coaching, where we've worked with advisors who have sent us businesses. And so we get businesses a lot of times coming to us saying, I'd like to be connected to an advisor or a mentor as part of this process. We have a very, easy relationship being able to introduce folks there. We work with bookkeepers and CPAs to help prepare financial statements or get folks, ready for the process of issuing bonds. On the banking side, right, we are not a bank. And so holding money, we have a very working and strong relationship with a number of banking partners to support the operations side of our business, right, and hold money in escrow, right, control the movement of funds as we're paying businesses back. And there's a host of other pieces. So what we really like to talk about is this SMBX network effect, right? For us, it's about building community. It's about really, again, changing the stigma of small business investing to making it something that anybody can do. Anybody can put $10 and invest in a small business today, right? That's a piece of the experience that we've created. And so anybody who's interested in helping support that, right, or part of that network, it becomes available to businesses as they work with us, whether that's banking partners, right, whether that's CPAs or bookkeepers. It's digital marketers, it's IT companies, it's website builders. It's a set of resources that you can take and figure out how to leverage as you go through this fundraising process, because, we believe the two are intertwined. Starbucks sells coffee. Starbucks also sells a financial product, right? Starbucks stock. And so if small businesses can also start offering financial products along with the services or the physical products they sell, we believe that's going to, you're going to be able to compete there, right? You're going to get that attention. You're going to be able to support that and change the way that the financial system is structured today and where folks keep their money.
What's the difference? So, what's the difference in heavy lifting between some of the clients you're working with? Because I'm going to guess that some clients want a lot of hand holding in this process. And I always think of, as a small business owner, whether it's cutlery, brewery, restaurant, ice cream shop, whatever it may be, right? You're doing a lot, right? So how much heavy lifting is involved in this process on behalf of the businesses or by the businesses? And what's the differences, I guess?
It's a great question. We've had folks who have come to us and said, I want to do everything, don't touch, I just need your technology. I've got my investors set up. I want it to be friends and family. We're ready to go. We're going to rock and roll. And we have folks who have said, can you please, do all of the heavy lifting? And so that's a conversation we'll have with the business. We know, small businesses are busy all the time. Our goal is to make the operations side is pretty simple. It's DocuSigns, it's reviewing things and giving us sign off. On the marketing side, we can really be as involved or not involved as you want. We have clients right now where we're setting up online lead flow, both for their bond offering, as well as assisting them on the e-commerce side of their business as they're going through setting up e-commerce for the first time, whether that's selling a physical product, right? Or, even delivery, right, is now e-commerce in a way, right? How do you take somebody who's made it a portion of the way through your cart, but didn't check out and make sure they actually follow through for that delivery order? So in the grand scheme of things, we can do everything from creating the creatives. So all you have to do is figure out what you post on Instagram, right? And what we're putting on Facebook and send an email newsletter. Or we can kind of be consultants more in the process and say, here's what we know that works, feel free to run with it on your own.
Oh, that's great. Neil, so let's talk a little bit about some of the experiences that you have, just a few, because we only have about 5 more minutes in the session, but I just want to make sure I give you an opportunity to, you've had a couple success stories, I think, with helping clients navigate fundraising via the chamber and other outlets. I think one of them spoke at one of the pressers, right? Flags of Valor, or is that right?
Yeah, that's another great case study. It's a company that's on the Small Business Council with me and Saïd, called Flags of Valor. They're a veteran-owned business that they employ a lot of veterans, and they're owned by veterans, and they produce these beautiful flags made out of wood. In fact, they just sent me one, Saïd, which was a nice gift, because they were in the same boat as everybody else when this whole thing was going down, and they desperately wanted to get some of the PPP money and didn't really know how to do it. And one of the things that was interesting in the whole process was that the larger banks were having a harder time getting these loans done than the smaller ones. So they reached out to me. They were didn't know what to do. I got them in touch with a smaller community bank, which is another lesson learned for all of you on the webinar, who were able to process their loan in about 6 hours with the SBA. And they did have all their paperwork. Those PPP loans, they also do require, similarly, 2 years of financials or your tax returns and payroll and all that. So we were able to push that through, and this was right before the end of the first. Remember, we're in the second tranche of PPP money. When the first one did go fast, they $330 million or $1 billion went out the door in about 3 weeks or so. So at the last minute, they did get that money, which has been tremendously helpful for them. And we continue to talk. I think what's interesting, and this is into the SMBX product, is they did use that money to keep people on the payroll, which they desperately wanted to do for obvious reasons, as we all do as business owners. But that money's kind of winding down now, and things are still tough. And so now the next question is, now we really need rebuild capital, operational capital, to get us through maybe the next 12 months, right? This isn't a 2-month thing. We all know that now. Could be hopefully short, but 3, 6, 8, 12 months. And that's where, we're going to be talking with the SMBX team for these guys to see if we can enhance the capital that they can use the way they want. And also, they have a great following of customers who love the product and also want to support a veteran-owned business. That's
fantastic. Well, you know what? Who can't be behind a veteran-owned and veteran-staffed organization? So with that said, we're in the last minute, but I want to make sure I give you an opportunity, Ben, to say if somebody's trying to get a hold of you, how can they do so? And then I'll do the same for Neil. So how can they get a hold of you, Ben?
For sure. So I dropped a little link there. If you go to go.thesmbx.com, we've got an opportunity for you to schedule time on my calendar. You can fill out the form there. And I'll reach out to you pretty quickly. It takes me about, a few hours here or there, depending on if I'm in a meeting. And then I'm also dropping, oops, not that, just ignore that last one. That is a combination of my personal email and my work email. Benjamin Stein at the SMBX.com is if you want to reach out personally and just say, hey, I attended the webinar, want to chat. The first step in this is learning a bit more about your business and what you want to do, answering questions you might not feel comfortable, asking in front of everyone. And then from there, going through the operations and talking through the logistics more in depth. I think to close off, what I would say is, the question is how to raise capital in a pandemic. And I would just encourage folks to think about their local community. Folks right now, support for small businesses at an all-time high, right? We know we have a problem. We know that there's not enough capital coming out of the government, or when it is coming out, it's restricted in ways that can be used. Folks want to help, but they don't want to donate. And so I think it is, they do want to donate, I shouldn't say. Some folks want to donate their capital, but they want to invest a lot more, right? I can't buy $500 worth of gift cards to an ice cream store, but I can certainly invest $500, right, into a business, knowing that's coming back to me over the course of 5 years or however long that might be. And so we encourage folks to do that. And then the other piece I'll just say is, always a great time to refinance.
Excellent. Thank you very much for that. Neil, www's globeviz.com is how they can reach you. So any other ways people can get a hold of you?
I just put it on the chat as well, and my email is on there, Hare@globeviz.com. So happy to answer any questions on loan or also with SMBX or get us all together. Anything we can do to help, we want to help small businesses get through this and get to the other side. So happy to help. Excellent.
Well, listen, thank you, Ben. Thank you, Neil. Thank you, SMBX and Global Vision, for being part of this. We are recording this session, so we'll be rebroadcasting this online to people who couldn't attend. For those who attended, we'll make sure that we send off your information to Ben and Neil. So if maybe they'll be proactive and reach out as well to see if they can help you in any way. Thank you very much on behalf of the team at Jobs in the US, and we look forward to working with you in the future. And thanks again for your time. Thank you, everybody. Thanks for attending.
Thanks, Saïd.